Welcome to the pre-market discussion of today's markets. With the jobs report released this morning at 8:30, we'll weigh in on how the markets are reacting, what this could mean going forward, and the result of yesterday's move below the year-long price channel. Let's start off with how the S&P futures are reacting to the jobs report. Overnight, markets were up from yesterday's close. In January, we saw a job growth of only 49,000 jobs, with economists predicting a rise in job growth as COVID restrictions were eased for the February earnings. Before the earnings release this morning, economists were predicting a gain of about 182,000 to 195,000 jobs, with no change in the unemployment rate at 6.3%. This morning's release came in way above that, blowing it out of the water at 379,000 jobs, double those predictions. This resulted in the unemployment rate shrinking slightly from 6.4% to 6.2%. However, with markets concerned about inflation, the stimulus package, and treasury yields, it will be interesting to see how markets respond to this job growth. On the one hand, we'll have a stronger and more stable economy with increased consumer spending, but on the other, a stronger jobs market may weaken the likelihood of the federal stimulus plans, seen by the markets as another infusion of capital to boost earnings and a potential inflation risk. We saw a sell-off immediately following this news that was quickly reversed, and now we're seeing a rally emerge. However, to put this into context, we have yet to see it erase yesterday's drop, and we're still tracking below the long-term price channel that we discussed yesterday. So while this is seen as growth here, overall we're not seeing that really strong upward trend that will yet indicate that we're returning back to those price levels. Let's look at yesterday's close and dig in further into the technical analysis of what yesterday's drop means. As we discussed yesterday, there was a risk in the markets closing below this price channel for the first time in about 4 months. This last time that it happened in late October, it was after a breakout in the price channel, came back down, and then went below the price channel. However, this time we did not see that trend. We saw a weakening over the past few weeks, setting up for yesterday's close below the price channel. There are 3 scenarios at play here as we can see this emerge, especially as we consider the earnings report in play as well. One of them being hitting this line of resistance and coming back down. We could see it just straight down drop, obviously. Or the third scenario here is going up above that price channel and coming back into it again. However, at this time, I'm neither bullish nor bearish and want to wait for a new pattern to emerge in the coming days. However, with these cyclical patterns that we're seeing, an overextended market, long-term price resistance as we discussed yesterday, and margin debt at an all-time high of nearly $800 billion, this feels like we may see a sell-off continue in the coming days and weeks. Later today, we'll be reviewing the momentum results of the picks that I discussed at the beginning of the month. As the momentum selection was heavily weighted towards energy, we're seeing strong returns to date, outpacing many of the indices. If you're interested in hearing more about those results and momentum strategies, hit the subscribe button below. Also interested in hearing your thoughts with this or the jobs report out today. Let us know where you think the market is headed. Leave your comments below. Thanks.